Well, in a change of pace, US markets fell in overnight trading. Most of the major indices down around 0.5%, and it was a direct response to economic data. And it does look like after the earnings season has been completed that we're moving back towards the macro outlook as the big driver of markets. Now, naturally enough, when the selling hits a market, those most popular stocks tend to get hit. Oracle was down 5.5%, Tesla down 4.4%. Intel made a 9% gain, but of course its share price has been much reduced over the last 12 months and it's coming back from a lower position. There was some talk of a potential another deal after last week's Nvidia deal, but there's no substance to that talk at this stage. Interesting to note too that yesterday the Hang Seng fell, but the Hang Seng, the Hong Kong Tech Index was up almost 1%. So in a falling market and at a time when global markets are under pressure, the Hong Kong Tech Index still managed to gain. And that points to the dynamic we've been talking about for some time now, that in valuation terms, many of the Hong Kong stocks look cheap compared to their global peers, and that the Hong Kong market is playing catch up. Now, that catch up could last weeks or months, but there's certainly some strong evidence for it yesterday and a good clue for investors. It's the tech stocks, the big tech stocks that are making the difference to the Hang Seng's performance. The other big news in overnight trading was the strength in commodities. We've seen all sorts of gains across the board. Oil prices were up. Silver prices have hit a 14-year high above $45 a pound. Copper prices are really moving higher. We heard news recently that the Grasberg mine in Papua New Guinea had unfortunately suffered a landslide. 2 lives were lost and another 5 people are still missing. And the concerns about that have meant that that mine has now been closed until at least 2026 while they remediate and deal with those very important issues. So Freeport McMoran, of course, its share price under pressure. It dropped by 6%. The flip side, though, is that copper prices are strengthening. And we saw a gain from up to about $4.80 a pound for copper. And it does look like we've got a real reason for further gains across the board, because when it comes to particularly commodity markets, it's the marginal buyer or seller that makes the difference. Now, the Grasberg mine is the second largest copper mine in the world. So removing that source of supply, and the company itself has cut its guidance for 2026 by 35%, removing that supply can make a big difference to the price. And the gains we've seen might not be the last movement in the copper price that reflects this change in the supply outlook. Gold and silver still looking great, but the one that's been flying under the radar is platinum. Now, platinum prices are up 50% this year already. And with a listed ETF tracking those sorts of gains, it's been a spectacular run for those who've been paying attention. Now, platinum occupies an interesting space in the metals. It is a precious metal, but it's also an industrial metal. But however, it is the uses as a adornment, as jewelry, that is driving the platinum price at the moment. Regardless, the momentum is very strong. Platinum, a neglected performer. We've been watching the gold and silver price closely. It's time also to bring platinum into focus. Now, but the biggest news overnight was the US data that was released, and in particular, GDP data. Now, this was for the second quarter. So we're looking backwards. We're looking in the review mirror here. But for the second quarter in the US, the final read of growth is up 3.8%. Now, that's a very good outlook, and that could well mean positive things for company bottom lines across the share market. The problem, however, is one of the key drivers of the gains in the US market has been expectations that interest rates will be lowered. Now, a strengthening economy does not go with lowering of interest rates. And if we see further evidence that the US economy is stronger than was thought, the potential for interest rate cuts comes off the table. And that's been such an important driver. We could be entering into a situation where good news becomes bad news. That good economic data will mean less likelihood of rate cuts, which will lead to selling in the share market. Now, there are plenty of ways this could play out, but what a particular concern in the data released last night was a big lift in durable goods orders in August. They're up 2.9%. And while GDP is backward looking, and we can shrug it off and say we look forward, durable goods orders are forward looking. They're seen as a leading indicator, and that strength suggests that the strength evidenced in the second quarter in the US is continuing, at least in August, according to the data. So we saw markets edge away from the potential for rate cuts. The short-end interest rate traders are now pricing only an 86% chance of a rate cut at the next Fed meeting, backed off from a 100% or thereabouts. But bond traders are taking a very different view, and the 10-year bond came under pressure. It traded up to 4.17%, and those yields are now have a upward trajectory from those lows that were close to 4%. And it does appear that bond traders are suggesting the economic outlook is likely to strengthen, and that could mean no rate cuts, which could bring a substantial correction in US share trading. So something to be aware of, all investors. A lot of people are pointing to September as the toughest month for share markets. Perhaps it's anecdotal, but in my mind, it's October. And so although people are sort of applauding the fact we've got through September without a significant sell down, I would suggest that October seasonally can be just as dangerous. So something for investors to be aware of. So looking at our watch list for today, Freeport-McMoran's one that we're looking at very closely. It's now down 22% in just 2 days. The whole year's gain has been wiped out. And with the PNG mine production suspended because of the mudslide, it's unlikely we'll see anything to suggest we should be revising earnings upward for Freeport-McMoran. So we've seen plenty of gains in the copper price. The CEO of Freeport-McMoran himself said disruption may drive copper prices higher, but it does look like Freeport-McMoran shares will be under pressure. And a lot of professional traders looking at pairs trading within the sector, buying another copper producer they prefer and selling Freeport-McMoran. So we could see that gap between the company and its peers continue to widen. A locally listed copper play, Capstone Copper, is a Canadian miner. It was up 11% yesterday and is up 33% in 3 months. It has a number of analysts with a strong buy rating. The shares are at an all-time high, and they did gap higher. So one to be careful of given the volatility in the share price and what looks like instability, but nonetheless a clear upward direction at the moment. Capstone Copper on a number of traders' radar. And so naturally enough, the third stock on our list today is Chalice Mining. And the reason we're looking at Chalice is it produces platinum. Now, it produces platinum alongside a lot of other minerals, just as most platinum producers do. Cobalt, nickel, gold, copper, all of these are generally found. Palladium are all found in conjunction with platinum. So it is a multiple miner, but it does have platinum exposure. And the chart is very interesting in this stock. It's been absolutely trounced after reporting a loss last year. However, it's showing a basing behaviour, and in trading yesterday, it burst through previous resistance. And on the face of it, from a technical point of view, that's suggesting there is further significant upside potential in Chalice Mining.